Has anybody ever played chicken before? Because that's what's taking place in the oil market across the globe right now. And the game of chicken is to see who blinks first and gets out of the way before they have a collision. Today, right now, everyone's trying to figure out, does $83 a barrel seem like a fair price for oil prices all over the globe? West Texas Intermediate's $83 a day. Is that a fair price? According to statistics, it looks like we produce at $65 to $70 a barrel just to break even. In other words, we don't make any profit unless it's higher than $65 a barrel. A lot of information is out there that says other producers around the globe, like Saudi Arabia, Iran, Iraq, UAE, Russia, they all have really low break-even prices, $10, $12, $30 a barrel. That's not correct. That's not true. What really has to happen is the effective use of a barrel of oil to run their economies. Why does that matter? The United States is one of the only countries in the world that the oil and gas sector is owned by private companies or public companies. It's not owned by the government. So when we talk about $65 a barrel in the United States for break even, it's because that's what it costs private companies or public companies drill, test, complete wells. We can make a profit over $65 a barrel. You'd be shocked to know, though, that if you look at the statistics, in Iran, it's like $165 a barrel because they only use oil and gas to run their entire country, their military, their nuclear program. Everything is run off the sale of oil. They need to produce a lot of oil. What little oil they do produce has to have the highest price per barrel of any other producer in the world. Second to that is Saudi Arabia. You think Saudi Arabia enjoys oil prices at $55 a barrel? No, they do not. They need $87 a barrel. And you go right down the list to Iraq and Russia. All of them, our price of oil has to be higher than $60 a barrel, and most of them are higher than $80 a barrel to break even. So there's two functionalities when you talk about the price of a barrel of oil being fair, reasonable, or marketable, or even a level playing field for economic continuation of developing oil reserves around the globe. There's the actual cost of drilling a well and what it takes to pay the cost of that well back. That's called a barrel of oil break even at the well. But an economic break even is much different. That is what it takes for the owner, the parties that are in charge of oil and gas development within any oil producing country to effectively say, we must have this much revenue from the oil that we produce from our own resources. I want to tell you this because it's important to know that at currently $83 a barrel, Saudi Arabia is not even breaking even. At the current price of oil, you need to be twice the price for Iran to break even. At the current price, you barely have countries like Kuwait making break even. They need $77 a barrel. So you're looking at a market that everybody says we've got to have oil at $55 or $60 a barrel. That's what President Trump's been saying since he took office last year. That's complete nonsense. The world will not accept $55 a barrel. The United States producers will not accept anything lower than $65 a barrel. So at $83 a barrel, most people are scratching their heads, say, wait, it's $20 a barrel higher than last year. It seems like it's awfully high. No, what you've had is an artificial interference in the free market. You've had policies and procedures put in place that have driven the price of oil down, like production restrictions. Saudi Arabia decided to hold back 2 million barrels a day for 18 or 24 months. Why? They needed the price of oil to be higher because they needed higher, not just the U.S. So today, if you're listening and you're watching the news in the Strait of Hormuz, you're talking about the Iranian war, you're talking about the Russian war with Ukraine and what Ukraine's doing to decimate the Russian oil supply chain in terms of terminals and refineries and ships and vessels. What's really happening is the Achilles heel of the aggressors is so tender because what they do is they live and breathe off the price of oil. It affects their military, their budgets, their economies, the support for the wars that they're in. And if you can take that Achilles heel and chop it in half and drive the price of oil down, it weakens them. But effectively, the war in Iran has done the opposite. It's driven prices higher. And even though the president and all the other countries that have participated in the supply of soft barrels over the last 120 days to keep oil prices down around $82, $83 a barrel, the fact of the matter is that game's over. Now we're about to see the true mark-to-market of what crude oil prices are worth. And what you're going to find out is the higher the price of oil goes, the more it feeds fuel and economic benefits to the very countries that are causing the wars in the first place. It's almost like you cut your nose off to spite your face. We're not going to see price of oil lower. We're not going to see resolution of the wars in Ukraine and Russia, or we're not going to see the resolution of the Iranian-U.S. war anytime soon. Because what they're fighting about is energy. And what they're fighting about is using energy to fund their military activity. What they're fighting about is something that we cannot control as a country. But for those who invest in oil and gas here in the United States and those who own oil and gas assets, you're about to receive some incredible economic benefits because I personally believe oil will be at $125 a barrel or higher by the end of this year. That's what I think, that's what I believe, and that's what the data is telling me.